What's up, my degens, my dirt bags, and Tesla bulls that don't really understand how this $1 trillion package for Elon is actually going to work. So apparently, the man is now a trillionaire. He owns the moon, and he's paying his rent in robotaxi coupons. At least that's what you'd think if your only news source was TikTok dudes filming quote unquote explainer videos, which this is not one of those, from the front seat of a leased Model 3. The reality check here is Elon did not just get handed a $1 trillion check. There is no suitcase, there is no wire, and no, the Fed did not print a special Musk only dollar. What actually happened is more boring, more complicated, and way more important for Tesla investors than the headlines make it sound. So today we're going to do what nobody on social media seems interested in. We're going to walk through the actual mechanics of the $1 trillion package, what Musk has to do to earn it, and what it means for Tesla stock in 2026 and beyond. Let's go ahead, make like some butt cheeks, and dive straight into this. So, first question, is Elon Musk a trillionaire now? Short answer, no. And the long answer is hell no. What shareholders just approved is a potential pay package spread over 10 years. That could be worth around a trillion if the three things happen. Tesla hits insane operational targets. The market cap climbs from 1.4 trillion to 8.5 trillion, and the stock price cooperates for a decade straight. Something it historically, if you trade Tesla, knows it doesn't do. So this is not congrats, Elon, here's $1 trillion, go buy Saturn. It's more like congrats, Elon, the right to earn a ridiculous amount of Tesla stock if you somehow turn this company into a combined Avengers of AI, robots, cars, and SaaS. And let's just be clear here. Elon doesn't take a salary from Tesla. No cash wage, no standard bonus. This package is all stock, all performance based, and all tied to results. So, right away, facts, no, he's not a trillionaire. So, shut up. And he's been given a path to become one if Tesla becomes something much bigger than it is today. Now, what's actually in this $1 trillion deal is what you're probably thinking next. Let's talk structure, because this thing is not one big lump sum bag that he gets to walk away with. We're not talking about fucking kick influencers that have a rain bet subscription, okay? The package is 423.7 million shares, split into 12 equal tranches of 35.3 million shares each. These are performance-based restricted stock awards, not free candy. So no, you can't be one of those asshole kids who see a candy bowl on Halloween and it says take one and you take the whole thing. For Elon to collect those tranches, Tesla has to hit two types of goals. First, operational/business milestones, and second, valuation/market cap milestones. Think of it like a video game. You beat the mission, those are your operations. You unlock the boss level, which is your valuation, and he has to essentially do that 12 times. Only then do you get the full congrats, you might be worth $1 trillion achievement badge. Now, the operational targets, mind you, these are knucking futs, okay? Here's what Tesla needs to pull off on the operation side for Elon to earn the full package. 20 million vehicles delivered, 10 million active full self-driving subscriptions, 1 million Optimus humanoid robots delivered, and 1 million robotaxis commercially deployed. This is not say AI on an earnings call and print stonks. These are real world, high capex, execution heavy milestones. The board is basically saying if you want the big bag, you don't just pump the stock, you build Skynet with cup holders. They even mapped an entire financial path. Their EBITDA earnings before interest, taxes, depreciation, and amortization going from 50 billion to 400 billion over time. So yeah, the board is dangling a $1 trillion carrot, but it's attached to a treadmill set to Olympic marathoner. Now, the market cap targets, which are 1.4 trillion to 8.5 trillion. The second half of this deal is valuation criteria. Right now, Tesla's worth about 1.4 trillion. For Elon to get the full package, Tesla's market cap needs to reach around 8.5 trillion and sustain it. That implies roughly a 466% move higher from its current levels and a valuation that's bigger than any company that exists today. On top of that, each step, a mix of operational milestones plus a valuation milestone, gives Musk about 1% of Tesla in stock. Hit all 12, that's about 12% of Tesla in additional shares. And when people say 1 trillion, that's based on projected future Tesla share price, assuming he earns all 423.7 million shares minus the cost basis needed to acquire them. Net value estimate ends up around 878 billion, a target valuation. Still insane, but importantly, if Tesla goes to the moon, not Tesla just paid this today. So let's talk about dilution. If Elon gets up to 12% more of the company, that dilutes everyone else. That's not fake. That's just basic math. But it's conditional math. If he gets that full 12%, Tesla has hit $8.5 trillion. It's delivered robots, robotaxis, FSD subs, and EV scale on a level that basically rewrites the global transportation, energy, and automation industries. At that point, shareholders are asking themselves, would I rather have 100% of a 1.4 trillion company or 88% of an $8.5 trillion one? Most people are okay with a smaller slice, bigger pie, as long as the pie is real and not just PowerPoint deck with AI on every single slide. Now, the vote. Who actually approved this, you're probably thinking? Well, here's the important part. This wasn't Musk just writing himself a check. Around 75 to 77% of voting shareholders approved the package. That excludes the 15% of Tesla he already owns. So the people who are theoretically getting diluted voted to approve the dilution. Why? Well, there's a couple of reasons for this. One, they want him focused on Tesla. The board literally said Musk had hinted he could walk if he didn't get the assurances of voting control and upside. Two, they buy the AI and robotics vision. The shareholders didn't just approve his pay package, they also approved the idea of Tesla investing in XAI, his separate AI company. And three, they think his incentives are aligned. He only wins big if the stock and the business win big. This wasn't universal love, though. Some big players opposed it. Norway's sovereign wealth fund, proxy firms like Glass Lewis and ISS, and governance hawks who worried about board independence and overconcentration of power. So the message from shareholders wasn't do whatever you want, King Elon. It was more, we're rolling the dice with you again, but this time, if you're going to fuck us, at least lube us up first. Now, the risks investors actually need to care about. Let's go ahead and list those out. One, execution risk. 20 million cars, 1 million robotaxis, 1 million humanoid robots, 10 million FSD subs. None of that is just slap AI on it. If Tesla stumbles on FSD safety, regulatory approvals for robotaxis, cost to manufacture Optimus robots at scale, or AI infrastructure build out, think chip fabs, data centers, energy, this whole 8.5 trillion AI robotics empire starts looking more like a very expensive sci-fi pitch deck. Two, we have a valuation risk. Right now, Tesla already trades at PE, PS, and PCF multiples that assume massive future growth. If that growth slows or the market turns on high multiple AI stories, you get, well, multiple compression. And that makes those $8.5 trillion scenarios a lot harder to hit, even if the business is growing. Number three, we have meme and momentum risk. Tesla still behaves like a quasi meme stock. Heavy retail ownership, massive social media engagement, and Musk himself directly talking to retail holders on X. The good news, Musk can't just meme his way to the full $1 trillion. The structure forces him to hit real world operational milestones. The bad news, however, the stock can still experience giant mood swings based on narratives, politics, AI drama, or whatever he posts this week. And number four, governance and concentration of power. This pay deal isn't about money, it's about voting control. The more stock he gets, the more insulated he becomes from shareholder pushback. That can be good if he's right about the future, but it's a disaster if he's wrong or, well, he just gets bored. Now, let's talk about their strategic pivot. If you're a Tesla investor, this is the real story. This package is basically the board saying, we're all in on Musk's vision of Tesla as an AI and robotics company, not just an automaker. They are explicitly tying his payout to robotaxis, Optimus humanoid robots, FSD subscriptions, and AI infrastructure. Plus, shareholders approved Tesla being allowed to invest in XAI, his separate AI startup. So Tesla's future isn't just, well, sell more cars. It's turn Tesla into an AI-powered hardware plus software plus robotics ecosystem and hope we don't faceplant into regulatory or operational walls along the way. If it works, the upside is massive, like a BVC. If it doesn't, you're left with an expensive car company, thinner margins, a lot of capex sunk into robots and chips that, well, didn't pay off. So, what does this mean for Tesla stock in 2026 exactly? Well, let's net it out for investors watching this. Bullish interpretation. Musk is now ultra incentivized to scale FSD subscriptions, push robotaxis hard, commercialize Optimus, and drive AI and cloud like reoccurring revenue streams. Shareholders essentially said, we're fine paying him like a sci fi emperor if he actually builds the sci fi empire. The package may reduce the risk that he, one, walks away, gets bored, or focuses entirely on SpaceX, XAI, and X. Bearish interpretations. Well, the valuation already bakes in a lot of this future. Any misstep, delays in robotaxis, FSD regulation drama, robot costs, and AI capex drag on margins. This could mean Tesla grows, but not fast enough to justify the current or implied future multiples. Dilution from Musk's package is material if they hit only some goals. You get the dilution without the $8.5 trillion upside. So, let's make like a dude in the Castro and find the bottom line of this. Elon Musk did not just get paid $1 trillion. He just got a 10-year ultra high difficulty performance contract tied to some of the most aggressive operational and valuation goals in corporate history, approved by roughly 3/4 of Tesla shareholders, and a structure that says if shareholders get filthy rich, you get astronomically rich. You can love it, hate it, or think it's a sign of late stage capitalism cosplay. But if you're a Tesla investor, the question isn't, is 1 trillion too much? The question is, do I believe Tesla can realistically hit enough of these targets in cars, AI, and robotaxis to justify today's price and tomorrow's dilution? Because if Elon wins big under this plan, you don't get to just clap for him on X. You're along for the ride too, up or down. Now, that's all I got for you today. I hope you guys were all able to get something out of this. My name is Max Pitts. This is Trades and Gains. I hope you enjoyed this. Go ahead, like, subscribe, leave your most controversial take. Are you bullish? Are you bearish on Tesla? Let me know down below. I will see you guys in the next episode. And yeah, have a great rest of your day.